All right, sorry for the lateness. Had a lot to do today, a lot on my mind. This is week 14, Outlook number 2. April Fools is today. All right, and that's what the price action to me was really looking like. It was looking like some foolishness. All right, starting with the Great British Pound, let's go ahead and zoom back out to the 4 hour time frame. I have some pre-annotations on here based off of my analysis that I was conducting throughout the day. Effectively, what we detailed out last time was that we broke the price leg and we're looking for continuation of price action. We saw an immediate mitigation of this price gap here, but it wasn't really valid for any entries other than potentially a break of structure continuation. And it did give a very nice response, but it ended up failing. And so what ended up happening, as you can see here, is we have the formation of a new price leg immediately after breaking the previous price leg. So now this new price leg exists from this high down to this low, substantiated by the break of structure of this previous high during the impulse phase of this new price leg. And so now we've begun to pull back. And we've pulled back to mitigate not only this high, but we are now looking, what I'm expecting is a targeting of this high. And what I would like to see, because there is nothing left on the premium side as far as any relevant areas of interest, I would like to see a liquidity draw model form here where we mitigate this high on the premium side, very close to the discount side, but a premium side, or very close to equilibrium with the premium side of this price leg, and then we give entry opportunities and roll over and continue the price action lower. That's what I am anticipating, but we have to wait for that to happen. This is just my anticipatory analysis, but we have to see what the structural action is going to be here as we reach this high. We have not broken the high. We actually just created equal highs. This is the high here is 1.3344, and the high of this candle is 1.3344. So we've generated equal highs. We've generated discount side, we've generated premium side. As you can see, there are no areas of interest inside the premium side of this price leg, only effectively liquidity points. So if price is pulling back, it's pulling back to liquidate or activate more sell orders or balance sell orders during this impulse. And this is where price is likely to be drawn towards, in the coming trading day. That's what I'm looking for. It could, mess around inside of the discount side, but this is what is most likely looking to happen, especially if we're pulling back because we failed to continue lower. All right, moving on to gold. As anticipated, I said that we'd be looking to target this high here on the 4 hour time frame after failure of mitigation or after failure to purge this liquidity point here on the discount side of this range. So now we are pulling back ever so much more into the premium side. We're edging towards the equilibrium point of this range, and we're moving into the premium side. We'll see what happens from there. But as of right now, we have a break of structure, or really, I guess the action is a break of structure of this liquidity point. So that's showing that prices has intent to move higher. And so now what we should be looking for is potentially new liquidity to form, or looking for pullback into an area of interest. Immediately, I see this, but it's not really relevant to me because it doesn't fit all the rules I have for an area of interest, especially if it's a price gap. I need to see some sort of mitigation of a previous area of interest, and this is not that. So if there is going to be any formation of price action, this wouldn't be relevant to me, but maybe I could see this because this is an immediately formed price gap covered, and I could see that after this mitigated, we then have this price gap that was generated here, and we're actually in the process of mitigating that now. So I could possibly see that, but I'm not too keen on the price action on gold right now. Especially because we are entering the most sensitive area of a range, which is around 50%. So I'm going to wait for some more price action to form. If it decides to continue running higher, so be it. But I'm not going to hallucinate or give myself analysis paralysis trying to figure out what gold is about to do right now. I'm going to let it range, let it give more price action to form up more trade ideas in the future. All right, for the NASDAQ, similar thing. We pulled very deep into the discount side of this range, and we almost, tapped areas of interest over here, existing very deep inside of the discount towards the low of this structural point. And we started pulling back towards the premium side, or back towards equilibrium of the range. And so as of right now, what I should be expecting is remembering that I told you everything on the premium side of this range to me is completely balanced. I don't see any reason for price, if it reaches the premium, to just not continue higher. Or if it is going to stay within the range, that means that there are orders, sell orders, that are above some of these liquidity points that have yet to been activated, that would lead us to go lower. So the immediate liquidity point that I would like to see mitigated, which actually happens to be on the discount side of this range, would be this high here. So this high is what led to a break. The high that I have annotated is what led to the break of a previous liquidity point here. So because of that, this high is relevant. And as you can see, after we broke that liquidity point, immediately we had a bullish candle that attempted to reach back towards that high but failed to do so. And so that kind of logic leads me to believe that there are some sort of orders resting above this liquidity point, or resting at this liquidity point, that need to be balanced, liquidated, activated. And so that's why I have this anticipatory arc here, where I'm expecting, similar to the Great British Pound or the Pound futures, I would like to see a liquidity draw here at this high that leads us to a purge of that liquidity, and then we start moving lower again, continuing the bearish price action. And this is all bound by the fact that everything on the premium side is completely balanced to me. I don't see anything that's left for us to sell from on the premium side of this range. And this was basically by design. I'm not going to go too deep into that. There were opportunities, but based off of the rules that I have and how I define the current market state, I literally said that all of this was still a part of the bullish run. And so I was looking for bullish plays this entire time. Um, and that's totally fine. But now that we are in the range, I mean, effectively, like, the only opportunity that I saw for sells was up here, which would have been counter trend anyway. But it actually ended up being a part of the premium side of the range, so it revealed itself late to me, showing that we are inside of a range, but it's totally fine. But as of right now, what I'm seeing, the logic stands that everything on the premium side is balanced. If we're going to break structure here, we're going to pull back to more liquidity points. We're not gonna. There's no areas of interest that I would see that are relevant. This is not an area of interest to me. This isn't, obviously, and this is not, or this is already a mitigated area of interest by this wick here. And so we start looking inside of a range based on the structural actions, and you have to navigate this by clearly marking out your highs and lows, which are your liquidity points, to dictate how price is moving or flowing inside of this range. And so this is the most recent high here inside of this range. And so to give you a little bit more context, because this is a very, very consolidated area, this is a high here, this is a low, this is a high, this is a low, this is a high, this is a low, this is a high, this is a low, this is a high. Why is this a high? Because we have a candle high here, or a wick here, a wick that's higher than it, and then a wick there. So that is forming of a high. This is a very subtle point that a lot of people miss, especially when they're analyzing structure. And this little example here, this live example, is how you need to be looking at structure when you're doing your structural analysis, especially if you're using a price action model. You need to mark out your highs and lows. They are your anchors to price action and understanding its flow. So because of that, this is why I'm seeing this high here as the relevant liquidity point inside that price is looking to respond to based off of the price action that has been given. Okay, so we'll see what happens from there. The counter analysis, like I said, is this could break and then we continue higher. But as of right now, there's no areas of interest that are left unmitigated. Everything is balanced here, so This is the only logical place price is going to be drawn towards to rescue or mitigate more liquidity. And so just because it goes to this high, this could be a very FU kind of play where once we take this high, it could have just like a very long wick to reach back into the premium, which would be, fine because that would show that it was purging orders up into the premium similar to how price did with this candle, right? Price dove all the way back into premium to grab those orders and then ran lower. So we could be seeing something similar happen here where we run this high and then we run higher into the premium and then go lower. All right. So just be careful with that. Now, moving on to the Dow Jones, we are in a very similar situation, except remembering that in the Dow Jones, we are in a bearish run. So every action that's looking to move higher is going to ideally looking for liquidity draws. We rarely want to see breaks of structure. The previous price leg that we had mitigated was this high down to this low, which we detailed. This response here is what led to that. And so now what we end up having is a response based off of the break of structure of this price leg, and we're running higher. Well, where are we running higher to? Well, obviously, we've already cleared this high, we've already cleared this high, we've cleared these relative equals highs here, so the next logical place that price would be looking to move towards would be this high. And notice how this is the high that led to the run on the low of the price leg. And so that means that if we're running back towards this high, thinking in this logical step, or this logical framework, then price should be looking to draw liquidity from the orders that are resting above here. And if it's not, then it's going to continue higher. So that's what we want to see moving forward here. So that's it for week 14, outlook number 2. Peace.